Hey everyone, I wanted to let you know that this is part one of a two-part episode with Rich Shelden, CRNA. In this first part, we discuss his journey and the factors that led to his ultimate turn into the cryptocurrency space versus other investments. Part two will air next week, and we'll dive more into cryptocurrencies themselves and strategies that Rich uses to protect and grow his investments. Enjoy. Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today. And now, on with the show. Welcome to another Provider Spotlight episode of the Plan B CRNA podcast. I've been chomping at the bit for this particular topic. I have such a huge learning curve with cryptocurrency investing, as do so many other people out there. My guest today is a CRNA in Texas who has extensive experience over the last 4 years investing in the cryptocurrency space. And he's also an active member of the Facebook CRNA NP, Bitcoin, and cryptocurrency group. Richard Shelden is a CRNA who has been providing anesthesia in a busy community hospital for the past 11 years. But his journey to anesthesia was far from linear, with a poli-sci degree to time at the US Treasury and from semiconductor manufacturing to a phase 1 drug development facility. Cryptocurrency investing is his current plan to build a larger nest egg in a shorter time frame with the goal of financial freedom and an early retirement. Rich, it's great to have you on the show today, buddy.
Hey, it's great to be with you again, Bobby, and to talk to you again. And happy to be here to talk about anesthesia and cryptocurrency.
Yeah, man. Well, I have to say, I love a good story with plenty of twists and turns along the way. So I would love to hear about yours. It took you a while to actually get into anesthesia. So what was your path like beforehand?
All right. When I graduated high school in 1988, I had no idea really what I wanted to do, but I knew my folks wanted me to go to college. And I knew at that time you had to go to college if you wanted to get a good job. So I finally got into Texas A&M, and I graduated in '93 with a poli-sci degree, which I was very interested in politics at the time. And I looked and tried to find a good job. I found a decent job at the U.S. Treasury Department in Austin. And for a new grad, it was great. It was Monday to Friday, no weekends. I was renting a house with some friends of mine, so we lived like kings on the salary that I was making, and everything was pretty good. But after a little while of being at that job, the day-to-day, the cubicle kind of work really began to grind on me. And I knew there was something else out there that was more important. It's kind of a funny little aside. Mike Judge's Office Space, the movie Office Space. When I saw that movie, it made such an impression on me. I recommend everybody go watch that if you haven't seen it. It's about the dead end job and the guy that knows there's more and wants to do more. And as an aside, a little interesting note, in one of the scenes of Office Space where they're walking through a little culvert, you can actually see the US Treasury building that I worked in. It's a blue glass building. You can see it in the background.
Oh, that's great.
And I was like, this is a sign. I've got to get out of this rat race. So I left there, and from there, I started, like you said, kind of a windy path. I worked at a phase 1 drug development company. I worked for Motorola in the fab, making semiconductors in the photo department, which was very interesting, but still it was not, I knew all the while in the back of my mind, the retirement issue kept coming back. I'd already kicked around, trying to figure out what I wanted to do, got a degree, realized I wasn't going to use it. And now it began to dawn on me, what am I going to do?
Yeah.
So I searched and searched, and it was actually through that. I mean, I did all sorts of labor. I worked as a welder's helper, a plumber's helper. I worked on an oil tanker in the Gulf of Mexico. I mean, I did hard labor, made good money, but at the same time realized that I don't want to work that hard or get hurt on a job like that. Would not be worth it. So I eventually got kind of steered. I met some paramedics, and I thought that might be a great avenue for me. I was in Austin still. They're outside all the time. They get to help people. That all that appealed to me. And it was during the second year of that program at Austin Community College, which is kind of a feeder program for Austin Travis County EMS, that they put us in the hospital setting doing airway management with the CRNA. And that's kind of when I had my see the light moment for CRNA. I pulled myself out of that department out of that program after investing 2 years in it to start all over taking prereqs for nursing. So I
Wow.
knew I was serious, and I knew it was something that I wanted to do.
That
Uh,
mirrors my path so much because I was introduced to nurse anesthesia while I was in an EMT basic program
really?
down in Tampa General. Yeah, it was something. I was in the emergency room. I felt more comfortable in the hospital setting anyway than being out and about on the ambulances. And this old salty dog nurse was like, "Hey man, if I had to do all over again, I'd be a nurse anesthetist." And I
Yeah,
was like, "A
exactly.
nurse, what's a tist?" You know, like so I mean, I get where you're going with this. This is really
Yeah,
cool, and you already have so much technical experience with you kind of have an analytical mind with some of the things that you've already been a part of. So I wonder, like that's got to be something that you certainly applied to your anesthesia career.
absolutely. And at the beginning, when I got into nursing school at the University of Texas, I started working as a tech in the ER at South Austin Hospital, which is now South Austin Medical Center. And so I kind of worked throughout the nursing program. Um, and then when I graduated from the nursing program, I got on in the intensive care unit. I knew people there; they knew me. It was an easy, they pulled me right up to the ICU, and I got very lucky. I worked for about a year, and then got accepted into Texas Christian University's nurse anesthesia program. Uh, that was a wonderful program, and I graduated from there in December of 2009. And at this point, I've put in since my you know graduating high school, I've gone now about 12, 13 years of not building up a nest egg, right?
Mm.
I've got a few retirement accounts from some of the jobs I've worked out, but nothing, if I started doing the math, nothing where I needed to be or wanted to be. So also I had a lot of debt coming out of school, not as much as CRNAs have now coming out of school.
Yeah, no kidding.
But I had over $100,000 of debt, which at the time was a lot to me. Um, and I began working. I worked for a year at my clinical site down in Harlingen, Texas, at Valley Baptist. And then I took a job back here in Fredericksburg at Hill Country Memorial, where I've been for the last 10 years. And over the first 4 or 5 years, I was involved in the company 401k. And, I thought that was okay. But then I began to do a little more study and research about investing. I was like, okay, I need to kind of leapfrog where I'm at. I've lost a bunch of time, a lot of investing, a lot of compounding, um, looking around for what it is that I wanted to be doing. And now that I'm finally making a decent salary, I felt the need to catch up. So I began to do all sorts. I bought books on investing. My wife introduced me to Dave Ramsey's um, program for getting out of debt, and I recommend that to everybody. That's a great way to get out of debt. He doesn't have the most material on what to do once you're out of debt or how to build your wealth, but getting out of debt, I recommend Dave Ramsey's program. Um, I began to find out that being invested in the company 401k might not be what I wanted to do. I learned that after the fees that are taken out all along the way over the course of a career, you could give away essentially almost half of your nest egg would go back to the company for all those fees, all those things they're taking out. And plus, you're trusting them to put you into a, you're kind of forced into a little wedge of an investing portfolio. Um, and so I also learned that about uh, if you just took your money and invested it yourself in a simple uh, index fund that tracked the S&P 500, you'll beat 80 and 90% of professional investors that are out there. So, and without paying all those fees, you can do it yourself. All it requires is a little bit of discipline and a lot of research. Um, and you can really do it yourself. So that's another thing I recommend. I recommend self-directing your retirement account, 401k or Roth, whatever you can apply for. I do recommend that rather than just being in the company 401k.
Yeah, for sure, for sure. And I mean, the path that you took, it's again eerily similar to mine because I started off investing, and I was taught, I was a follower of the Motley Fool for a very long time, and
Mhm.
they're still they put out great content, but it becomes a little advertising heavy, as a lot of companies do,
Yeah.
but still their basic tenets of advice were, hey, your core needs to be S&P 500. If you want to supplement it with individual companies, choose ones that are, first movers, and in whatever particular space they're in. And they were big proponents of, Marvel Studios and Netflix and Amazon, and those were their big hits along the way. And they've had some others that I benefited greatly from, but my core for a very long time was the S&P 500. And, just going that route with the index funds. And then again, finding a way to do something a little bit different. So, yeah, I've always been interested in different financial strategies. So what are some of the ways that you went with your finances once you got into that self-directed mode?
Okay. I was also a subscriber to the Motley Fool for several years. I enjoyed getting all that information. I'm one of those. I think that the more information you avail yourself to, the better. More information never hurts anyone. So I was satisfied with the returns from just the simple index funds for a while. But then once again, maybe it's greed. I don't know what that little voice was like. Okay, we've got to turbocharge this a little bit. We're still not going to be where we want to be. You're not going to be where you want to be for retirement. So I began to do a little bit more and a little bit more risky investments. It started out investing in individual companies, and I did that for a little while. And long story short, I wound up kind of on from the safe end of the spectrum over to the not safe end of the spectrum, investing in natural gas futures, which is a extremely volatile market. And man, the good times are good and the bad times are crushing.
Yeah.
So you can only I could only stomach that for a while. Now I managed to increase my portfolio by about 4 times by when I switched over from the directed for me, the company 401k, to self-directed. So I had discipline, I stuck with it, made a bunch of mistakes along the way, and I'll talk about those in a little while, just investing problems and mistakes that everyone will probably run into um, when they start doing things themselves, when they invest themselves. Um,
So how much
but it
time
was
did that?
about this.
Oh, I'm sorry.
Oh, do
I
you
was
want
just
to
gonna,
talk about that now?
well, I was going to say, yeah, just how much time did that take you to be more of an active manager in futures trading?
Well, let's see. That progression from just going into the index stocks, it probably was about a year. I was pretty satisfied with what I was doing. I was keeping up with my peers who were still in the company, even getting a little bit of an edge on them. Um, and then we had a few little market corrections. But at the same time, I just I just didn't think that I was going to be where I wanted to be. If I could see the trajectory, and I was like, okay, I'm not going to be where I want to be
Mhm.
in 20 years. If I continued here, this is good,
Yeah.
but it's not good enough, really.
But you were working full time as a CRNA. So how much
Correct.
additional time on top of that were you spending, per week or whatever for that futures trading?
Oh, per week, I would spend, uh, I would say roughly, probably a couple of hours a day. reading,
Okay.
in the evening. And then sometimes, a lot of times, I'll get up early in the morning and while I'm eating breakfast, I'll either review either YouTube videos on trading or I'll be looking at the news, which
Mhm.
is what I was doing then. I do the same thing now with crypto. I spend easily 1 hour a day plus, uh, just keeping up with the news, what's going on. I have a core group of uh, video, YouTube influencers, I'd say, that I watch on a daily basis, and that takes probably about an hour a day. You don't have to do that, but I like to stay current. I like to know between those three or four guys I listen to, I kind of get what's going on in the news. I get wind of any maybe new projects, any kind of regulatory stuff that's coming around. Um, you know, it's just a way to stay current.
Yeah. Yeah.
Um,
So getting back to some of the other stuff that you did. So you talked about, getting into these riskier oil and gas futures. What other kinds of investing did you get into?
well, it was about that time that it was about the time I was getting burned out I went almost strictly, that became kind of my whole investing strategy. I know people say I started out from being very diversified to being almost not diversified at all, chasing gains. And that worked for me for a while. I mean, there was a lot of volatility, but the overall trajectory was upward. And it was about the time that I was getting kind of burned out on the stress of the natural gas futures that I began to hear here and there about cryptocurrency. It was Bitcoin originally, because in 2017 there weren't a ton of other cryptocurrencies out there, at least not that I was aware of. And I heard about Bitcoin once or twice, and I figured it was kind of a you know crazy internet money, probably a scam, and I didn't pay much attention to it until about 2017, 2018. I hear, one of these, I don't know if it was on the internet or on the news, that the price of Bitcoin was approaching $20,000. And my jaw hit the floor, and I was like, oh man, I started immediately. I was interested, and I turned all my research over to the blockchain industry, Bitcoin, specifically Bitcoin, um, and I wanted to learn everything that I could about it. And I knew I was hearing stories about how people had become millionaires in a matter of months or a few years, and that appealed to me. The kind of strike it rich kind of lottery style stories that I was hearing. So I bought this book here. This is a Bitcoin Standard
Yeah.
by um, Saifedean Amos. I hope I'm
Yeah.
pronouncing that correctly.
We'll
And
put
I
that in the show
recommend that.
notes.
Yeah, I recommend that to everybody. It's kind of like one of the Bibles about Bitcoin. It talks about what money is, the
Yeah.
history of money, the evolution of money and store of value throughout history, and how that Bitcoin, which actually was birthed out of the 2008 financial crisis, as a way for regular folks to um, basically protect themselves against a government that's crazy on inflating the currency. And that made a lot of sense to me too. Um, I learned that it was also originally designed as a peer-to-peer payment program that was trustless and permissionless, meaning that you didn't need to trust anyone. You didn't need to trust a bank or get permission from a bank. You were your own bank. Uh, and you could send money across the world in a matter of minutes to anyone you chose to, and they could send you money. And it was just a whole new paradigm shift for money. Um, Bitcoin has since become more of a store of value with all the other cryptocurrencies that are out there in competition for the peer-to-peer payment system. Um, it's become almost like a commodity, like a lot of people call it digital gold. It's
Mhm.
a store of value, a place you can put your money into. And while there is a ton of volatility over time, it's so far it's appreciated tremendously. Um, so all that stuff appealed to me, and I began to read everything I could, and I realized about this time the Bitcoin price had peaked in 2018 and was entering a bear market. And I saw, man, that if you see that graph, that curve of that, it looks just like it terrorized me when I saw that the value had dropped. And I still began to take little bites at it here. I think Bitcoin was at $12,000 the very first time I took a little bite. I bought $1,000 of Bitcoin. Got me a wallet. I got a Coinbase account. Back then, there weren't a whole lot of exchanges that you could join. So Coinbase was my own ramp. I still use Coinbase and Coinbase Pro. And I continued to watch it. The more I learned, the more I found out that this Bitcoin tends to run in a 4-year cycle. And this was the second full cycle that was going on. And it was actually quite predictable. And it sounded almost like a good hedge to me. It wasn't random, as it appeared. If you look at just a weekly or monthly chart, it can appear very random. But if you break it up and look at a yearly chart, well, it's very cyclical in nature. So I began to realize that although Bitcoin was in a bear market, at some point it was going to bottom out and it was going to probably charge into a bull market again. So I began liquidating just about everything I had uh, to buy Bitcoin. And I mean, I had a coin collection, high grade, rare coins, sold it all. I had some precious metals. I sold basically 95% of those because
Wow.
I knew that this asymmetric asset of Bitcoin had the potential to just blow all those other assets away. And I learned and I still believe that Bitcoin will be taking market share from precious metals and from other commodities probably for decades. Uh, the market cap of Bitcoin is just under $1 trillion right now. And I think that it will be in the next 10 years, it will be a $10 trillion market cap. Um, at
It's hard
minimum,
to
I
believe,
think
man. That's,
it's
because
going to.
I say it's hard to believe just because it just such a tremendous trajectory. But then again, if you look back a decade ago, who would have thought that we'd be sitting here and Bitcoin would be where it's at today? It's already
Exactly.
been on such a tremendous trajectory, and there's so much potential, so much runway left in this space that it's
Absolutely.
really just being tapped. So,
Yeah,
well,
the market cap of gold is about $14 trillion, and the market cap of Bitcoin is 1 trillion. I think that Bitcoin will certainly overtake the market cap of gold because it's a better money. It's a harder money, and it doesn't weigh anything. You can send it across the world in a matter of minutes. You don't have to pay a depository to watch it and guard it. It's
yeah.
just got a lot of advantages over gold. And also, at this stage of the game where institutions are getting involved and there's really big money coming into Bitcoin, when I first learned about Bitcoin, there was always the chance, a much, much greater chance that it was going to fail and go to zero.
Mhm.
I'm not worried about that now. I'm not anymore. That's why when I kind of figured that out, I kind of went with reckless abandon to get all the funds I could, scrape it together, and start buying Bitcoin. And I took all that money that I had and I began buying. It was through the bear market of 2018. I pulled money out of my 401k. I mean, you can get a loan out of your 401k, and people scoff at that and say, "Oh, I would never do that." Well, the money I took out of there probably did about a several 100% increase. I mean, it was the right thing for me to do at the right time. It was just a good time to do all that.
Yeah.
I did that 3 times. I pulled money out because I couldn't directly invest it. Now there are vehicles that you can invest in. Grayscale, as a matter of fact, has some trusts, Bitcoin, Ethereum, and Litecoin, and a few others that you can go to your TD Ameritrade or E-Trade or whoever account, and you can invest in those. and to get some exposure to cryptocurrencies. And I recommend that too for people who either who don't want to, buy a wallet and take personal custody of their coins, or for those who are in a situation where they have a company, a self-directed, maybe even through work, 401k or Roth, that they're allowed to invest in those kind of funds.
Yeah. Well, okay. So we've started kind of dipping our toe in right here. I want to provide just a basis of knowledge for the folks listening, because let's just say I'm sure that there are plenty of people listening to this who are still very confused about what cryptocurrency and what Bitcoin actually are. So let's pretend I'm a fifth grader and you have to explain this concept to me of what Bitcoin actually is, what mining is, what blockchain is. Can you go into some of that detail for me?
I'll try.
Yeah.
I'm not an expert on any of those, but I'll do my best here.
Yeah, sure thing.
Blockchain technology is like I say, it's kind of a new paradigm shift too. It's what all these cryptocurrencies are based on. And the blockchain is basically a permanent immutable ledger that tracks every transaction that ever happened. And the blockchain will become instrumental in just about every industry that we deal with. Everything from shipping, certainly finance. Well, to get back to shipping, there will be blockchain will be able to track the foods that we buy from seed to plant to harvest to shipping to store to table. People will be at that. All that information will be there and available because of the blockchain, and it's going to impact us in ways that I can't even imagine right now. But I know it is a new paradigm.
So much of what Rich shared today rings true for me as well. For his investments, he found that a financial advisor just wouldn't cut it. And as CRNAs, we work too hard for our money just to hand it over blindly to someone else to manage, when index fund investing accomplishes the same results with fewer fees. But he didn't stop there. Rich felt the pressure of building a nest egg, and he wanted to turbocharge those returns. Like many of the folks that I've had as guests in the past, Rich decided to take some risks. Some worked and some didn't, but he learned that taking risks was something he could do and survive. If you want more of my take on risk taking, check out episode number 46. But what I want to focus on here is the early adoption piece of this whole thing. Yes, Bitcoin was originally created in 2009, so the idea that investing 8 years later counts as early is sort of a funny thought. But Bitcoin still hadn't taken hold of the public consciousness yet, and the potential of crypto was and still is enormous. The idea of being a first mover in an emerging market is one of the principles that I ascribe to. And Rich isn't the only person I've interviewed to find success this way. Devin Shaw in episode 7 and Stacy Kaysen in episode 49 with CBD. Matt Vargo in episode 19 with iPhone apps. Russ Melino in episodes 23 and 25 with Qualcomm and Apple stocks. And Jason Bolt in episode 47 with social media. All of them found success by getting into their respective markets in or near the beginning phases. And these growth phases carry a hefty amount of risk, but the rewards can be outstanding as well. That's going to do it for this week's Provider Spotlight. I hope you'll join me next week and learn more from Rich about the crypto space and some of the strategies that he's utilizing. Thanks for listening, and I'll see you next time. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.